If you're taking a look at some of the drivers of the U.S. dollar pullback this week, which is the easing of some of the tensions that we have globally, nothing has really changed. I mean, Turkish lira is back down today. The lifeline they received is a fraction of what they need to turn around their economy, pay down their debt. We have the market, excited about the China-U.S. trade talks, but at the end of the day, they're low-level talks. China's bringing in a tough negotiator. It's not clear whether they're going to be able to get those tariffs paused at the end of the month. And I think there's still a lot of uncertainty. If you take a look at the economic backdrop, the U.S. economy is still doing well. The Fed's still going to raise interest rates, so nothing has really changed.
I mean, to me, that's the biggest issue. If you're really trying to figure out where the dollar's headed, you have to look at the strong economy here, and you have to wonder what our Fed is going to be doing versus other Feds or other central banks. It's hard to imagine a scenario where our central bank isn't the one kind of leading the way.
Exactly. And I think today we've got a confidence number that's going to show Americans, growing more and more secure in the outlook for, the equity markets. Stocks obviously performed very well yesterday. So I think, regardless of how much we fear that, some of the geopolitical risks or the tensions are going to hit back on the U.S. economy, we've seen, very little evidence of that. And that's, as a result, that's not going to sway the Fed to shift their course. And we really need to see some more consistent deterioration in data for that to happen.
So what do you tell investors to do at this point?
So I think, the dollar is still the best trade. And as we're getting this pullback, it could give us an opportunity to buy at lower levels. Now, a lot of the currencies are very oversold, so there could be some short covering. But I think that they're going to be shallow. I think if you stay the course and you still look at the course of the U.S. economy and what's happening in the rest of the world, that easing back into U.S. dollars is still one of the best trades.
I mean, if that's the case, and I realize you're Forex, but you have to have the implications of what that means for the broader markets. We have a lot of guests who come in and say they like emerging markets, they like overseas stocks, and they're telling people to put their money there. But if you're a U.S. investor and you've got to translate that all back into U.S. dollars, if the dollar continues to rise, that can be a little bit of a risky place to be.
It could be, but emerging markets are an interesting place simply because they've fallen so much. And for example, I know we're still talking about currencies, but the Hong Kong dollar has fallen quite significantly. And many people are wondering whether, the peg is going to break. And I think that these central banks have much deeper pockets than they used to. So I think, those emerging markets from a long-term perspective still present quite a bit of opportunity. And, we're not going to get into the same type of crisis because of Turkey as we had in the past years.
You're convinced of that? Do you think that that's a fixable problem?
Turkey's a pretty small economy, and I think that's certainly going to be the case.